Hello, thank you for stopping to watch my video. I want to teach as many U.S. business owners, U.S. franchise owners, U.S. entrepreneurs, and also 1099 income earners how they can save taxes legally. The Spendthrift Trust is legal. It's in the IRS Tax Code 643B. So I'm doing this 30 days or 30 videos of clients to show you how they can save taxes year after year, generations after generations. The Spendthrift Trust comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads, started the Church of England so he could divorce his wives. What a swell guy. He goes to tax the lords and ladies of England, and they went back to the 12th century, the Magna Carta, and said, oh, no, King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. Our current tax structure that went into effect February, gosh, I said the wrong month, February of 1913. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys made sure they could save taxes. Well, if they can save taxes, we can save taxes. Hi, my name is Sally Gimmon, and I'm the owner of www.thetrustisisyou.com. My personal story, I became a real estate investor in 2018 when my mom got sick 2,000 miles from home. My parents were living in Goodyear, Arizona. They drove to Charlotte for my oldest nephew's wedding, and she got septic of the blood. She got into her pacemaker. They had to do open heart surgery. She was on the ventilator for 13 months, in a hospital for 15 months. My dad went and visited her every single day at the hospital. Thank God she got better and came home. But in 2019, with my mentor, I wholesaled 7 bank properties nationwide, paid off all my debt, and had $50,000 in my bank account because I thought I was being a smart real estate investor. You know that Super Bowl commercial saying, you're not a rock star? I wasn't a rock star. Fast forward, COVID strikes around March of 2020. I had 3 properties that did not pay me on April 1st, 2020. No money coming in. On April 5th, 2020, my CPA calls me to say, congratulations, Sally. You made so much money in 2019. Your tax bracket went from 22% to 24%, and you now owe $94,000 in capital gains. Congratulations. I had $50,000 saved. I tell him this on the phone. He's like, no problem. Set up an appointment with me. We'll get you on a payment plan. You'll pay interest and penalties. I'm like, that's your solution? That's no solution. Go to bed April 4th crying. A fantastic book to read, The Power of Your Subconscious Mind by Joseph Murphy. You put an idea in your head before you take a nap or you sleep, and your subconscious mind works on it, and you wake up with a solution. April 5th, 2020, I knew I was going to contact a friend of mine whose friend did HELOCs on paid off houses. I'm going to take care of my tax bill. And then I also remembered I had read an article about the Rockefellers Spendthrift Trust. It's called The Office. If the Rockefellers could save taxes, why can't Sally save taxes? It took me 5 months, but in September of 2020, I started both my business and my Beneficial Spendthrift Trust with the law firm I now work on behalf of. Paul Benson was a Harvard law professor who wrote 5 separate trusts to save specific taxes 78 years ago. Unfortunately, he's passed away, but now his grandson and great-grandson run the law firm, and that they stand behind everything that Paul Benson has done. In 78 years, not a single trust has ever been audited. They're so confident in that they now have a partnership with Lloyd's of London that if you get questioned by the IRS or you get audited by the IRS, Lloyd's of London has insurance that they will take care of everything, because it doesn't happen. 78 years, 800,000 clients, not a single trust has ever been audited. One trust in 78 years was questioned by a senior IRS agent. He goes down to Texas, where the law firm's located, spent 5 hours in the boardroom, approved the trust, goes back home. He sends an unsolicited letter back to Benson Financial Trust saying how he approved the trust. Then he retires being a senior IRS agent and became an affiliate like I am and went back through his Rolodex. He made buku money. Congratulations to him. My example today is a franchisee owner in Rhode Island. They contacted me in 2025, and told me the numbers they were making. Only thing I changed was 2020. I used the same numbers, $985,000 gross, 1099 income. That he's going to save. They are at 37% tax bracket. There's 4 ways to file your taxes. Most expensive way, single. Then there's head of household. You're divorced with children 18 or under. Then there's married filing separately, and the cheapest way is married filing jointly. Ladies and gentlemen, listen up. On January 1st, 2025, the IRS quietly changed married filing separately to match single from 10% all the way up to 35%. So if you are married, please file jointly and you'll save more in taxes. So today's example, a Rhode Island franchisee owner, in 2025, when he and his wife started the trust, they knew that they had made $985,000. I think this was 2024 numbers he gave me. I'm not too sure about that, but these are the numbers we use. I took them out to nerdwallet.com, free website. There's a formula there for single, head of household, married separately, and married jointly. So for federal income taxes for 2026, he saves $614. And then for Rhode Island state income taxes of 5.99%, an additional $59,001. For the full year of 2026, he gets to save $345,615. Or per month, if people pay their taxes monthly, it's an extra $28,801 that he'll never have to pay back. Worst case scenario, his great-great-grandson in 2095 thinks, hey, great-great-granddad was crazy. I'm canceling this trust and I'm canceling this EIN number. The great-great-grandson is going to be responsible for any taxes that are due in 2095. Anything saved in 2026, 2027, 2030, 2045, 2050, 2080, 2090, all of that will never have to be paid back again. The Spendthrift Trust is going to save you in 4 very important ways. You're going to stop paying federal and state income taxes year after year, generation after generation. You're going to leave a legacy. Number 2, you're going to keep your information completely private. This is on the federal level. LLCs, S Corps, and C Corps are on the state level. We highly suggest you shut down your LLC, S Corp, and C Corps because anyone can go online to the Secretary of State or the Corporation Commission and research them 24/7 by either your name or the LLC or S Corp's name. It's a true story. The gentleman who ran my Phoenix real estate group shut down 14 LLCs but kept his S Corp open because he had business credit on it. I don't know what happened at his Airbnb, but someone sued his S Corp for $1 million. He's like, all my properties in the Beneficial Spendthrift Trust. I'm like, yeah, but they sued the S Corp, that entity, not your trust. Because of that, he had to shut down the real estate group. I don't know what happened. He and I had a falling out about the same time. The guy was a narcissist. I'm doing much better that I moved to North Carolina and started doing my own real estate. But we highly suggest, and all your information is kept private. Number 3, talking about lawsuits. Can't stop you from being sued, but all lawsuits become frivolous and go away. Another example for you. One of my clients, my national real estate group, Patrick has 100 doors in Chicago. He wears a 5-carat diamond ring, a Rolex gold watch. I've never seen his RV, but let's call it a $250,000 RV. He can't slow down for traffic, hits the car in front of him, that pushes her into the car in front of her. So one car is squished. They get out to exchange information. His insurance card shows that the RV is owned by the Beneficial Spendthrift Trust. His Illinois driver's license shows Patrick's name and his home address. They exchange information. 4 weeks after the accident, he gets a $900,000 pain and suffering bill. He calls me. He's like, Sally, what's going on here? I'm like, Patrick, calm down. You have the attorney's name and the plaintiff's name. You're going to copy the first page of your trust and send a simple letter saying, I'm sorry, you can't get blood from a stone. I can't stop his insurance from going up. He had an at-fault accident. His Beneficial Spendthrift Trust pays for the insurance. The woman's car got fixed from his insurance company. If she was injured, the bodily injury from the insurance paid for this. She was just trying to get more money because she saw his Rolex, his pinky ring, and his expensive RV. Hey, let me make more money. Calls me back 8 weeks later and says, I have heard nothing. I'm like, yes, Patrick, it's gone away. Keep your information. You're going to save taxes. Keep your information private. All lawsuits become frivolous. And number 4, if you are over 65 or on Medicare, if you make too much money, it stops the IRMA surcharge on parts B and D of Medicare. Every October, the IRS goes back 2 years. So October 2026, they're going to check all 1040 tax returns of 2024. They're going to add, or the computers are going to add together, how much you're getting from Social Security, how much you're getting from pensions, how much you're getting from wages, how much you're getting from 401k withdrawals, SEP withdrawals, capital gains, interest income taxes, dividend income taxes, rental income taxes, and royalty income taxes, and add it all together. These are 2025 numbers. They haven't come out with 2026 numbers yet. But if you're single and make more than $106,000, you're going to pay a surcharge, the IRMA surcharge, on parts B and D of Medicare. If you're married, it goes up to $212,000. Here's a true story. One of my clients started a beneficial trust, and he went up to Oregon. He went to a church social. I don't know if someone didn't wash their hands or if it got too hot. He ate 3 deviled eggs, and his kidney shut down. He had to get on dialysis 3 times a week. They did a 2-year look back. He had bought a piece of land in Paradise Valley, just outside of Phoenix, and he wholesaled it 18 months earlier. That's when he bought the trust. They don't know that he had 4 Airbnbs in the trust because it's a different EIN number. They're just looking at his 1040 tax returns. They said, what happened to this money you made? He goes, I've been living on it for the past 2 years. They're like, well, now that you've had renal failure, we're going to put you on, in Arizona, it's called Access, pre-Medicare, and then on Medicare. He contacts me and he says, do you know my dialysis would have cost me $14,000 a month if I didn't have the Spendthrift Trust? I'm like, congratulations. I'm sorry this happened to you. He goes, I now have 7 Airbnbs. It's amazing. So with the trust, it's legal. It's in IRS Tax Code 643B. If your financial advisor or your CPA says, ooh, the IRS wrote a memo. Yes, they did. August 9th of 2013, the IRS wrote a memo and said they don't like tax code 643B. They don't like the irrevocable, complex, discretionary, non-grantor spendthrift trust. That's okay. That's their opinion. In my opinion, the worst vegetable out there is lima beans. You can't swallow them whole and you have to chew them. My mom loved lima beans. I used to have to suffer through lima beans twice a month and got nightmares. So with the Business Spendthrift Trust, I have been telling everyone you could save 90% on federal taxes and no longer pay state income taxes. Last Monday, we got a federal ruling because how Paul Benson wrote this trust, the corpus is an escrow account. Because of that, now you will save all federal income taxes, all state income taxes, and with the business trust. With the beneficial trust, it's for investors. You will stop paying capital gains when you sell at a profit. You'll stop paying interest income taxes if you're a passive investor. You'll stop paying dividend income taxes if you're in the stock market. You'll stop paying rental income taxes if you're a real estate investor. And you'll stop paying royalty income taxes if you have talents or NFTs. Most of my clients have one or the other, or they start with one trust and then decide they're going to get into something else and start the second trust maybe 6 months later or 18 months later, whichever they decide. My goal is to teach this to as many people as possible. Learn from my $94,000 tax bill and my 5 months of research how you can stop paying taxes on profits and how you can stop paying federal and state income taxes on anything you make. I have a free masterclass at www.thetrustisyou.com. And also, if you want to set up a free 30-minute tax breakthrough session with me, we have a Zoom conversation. I find out what state you live in, how you file your taxes. I show you the formula. I send you an email. Here's how much you're going to save. Here's what you're going to do. It's your decision. It's your timeline if you want to save taxes. Thank you for watching my video. I hope you all learned something new. Have a beautiful day. Take care.